Good afternoon, traders. John Caruso coming to you here for the afternoon of May 10th with a quick look back on the market here today. We do have the markets a little bit soft here today. The S&P 500 is off by about 0.75%. The Nasdaq's down over 2%, and so is the Russell down over 2% as well. Perhaps some of the weak numbers that we saw come out last week in the Purchasing Managers Index reports, as well as, of course, the jobs number that came out and missed expectations by about 700,000 on Friday. That's starting to catch up with the market right now. So we do have the S&P off, closing in on 1% right now on the downside. The 10-year yield's up over 1.6%. So we're not really seeing that flight to safety bid in the bond market. Perhaps the bond market's starting to look forward to the CPI and PPI data due out midweek. We are expecting to see more inflationary accelerating data come out. The CPI number, we're expecting an increase of 3.6% on a year-over-year basis. So keep that in mind if you are a bond trader. We are still longer-term bond bears and longer-term interest rate bulls. However, we have noticed a mounting short position on the bond market. So this is no longer a secret. This is a consensus call that the bond market, in terms of the positioning, the bonds are bearish. So be careful, because it would not shock me to see the bond market squeeze back to the upside for a few weeks to try to shake out some of those weak hands on the short side of that market. Crude oil looks like we came into the session up about 50-60 cents. It's given that back here today. We're down about 22 cents, back under 65. We are still longer-term bulls on crude. We think as long as we can hold 63 in the near term, 67 and then 70 are your next upside targets in crude oil. Naturally, the news of the Colonial Pipeline ransom attack over the weekend hasn't really affected the market all that much. It does sound like as if that is a manageable situation right now, and that pipeline's due to come back online towards the end of this week. So we'll keep our ear to the ground for any more developments on that. Regardless of the pipeline news, we are expecting to see very strong demand in the energy space throughout the course of the next couple of months. We like staying long crude oil as well as its derivatives as well, gasoline and, of course, heating oil. Natural gas is another one that we like. Natural gas is trading right around $2.98 at the present moment. We think $2.95 down to $2.85 in that 10-cent range is an accumulation zone. We do think on the July natural gas contract can reach as high as $3.20 and potentially higher if there's a good story behind it. So what else do we got here? The metals markets, gold. Gold was up 3.5% last week. We do think gold on the upside, we could test 1850, perhaps as high as 1860. We do think that those levels stop the rally here in the near term. For a trade back down to the downside. However, gold, perhaps in the back half of this year, could start to do a little bit better, but we do think we might have one more trade back towards 1800 before that market starts to do a little better in the back half of the year. Silver looks pretty good, still positively configured, still bullish trend. If gold gets knocked back, perhaps silver knocks back under 27. We think that'd be a fantastic buying opportunity in silver too. So that's all I have for you today. Feel free to reach back at me by email if you have any questions. I'll see you back here about midweek. Thanks.